Good evening, my dear students. Am I audible? Is it audible, my dears? Yeah. அனைவருக்கும் என் அன்பான வணக்கங்கள், my dears. Yeah. Hope my audio is clear. Am I right? Yes, sir. Yeah. Thank you, Noor. Thank you. Good evening to all of you. Today's program, last minute revision strategy, LMR strategy for financial management. For your examination, what and all you have to revise. Day before examination, what to revise, which area I have to concentrate. For the 11th hour preparation, this video will be useful for your preparation. First, I would like to discuss about ABC analysis for the chapter. What are all the chapters you have to focus more so that within less time you can score the more mark. One more doubt raised by the student, whether I can answer MCQ question first or descriptive question. Because even the previous examination, I got to know they are unable to complete the paper on time because of MCQ. My sincere advice to all the students, better you can complete the descriptive, thereafter you can go for MCQ. You know, to score 1 mark, you have to spend 1.5 minutes. 30 marks MCQ, 30% of the weightage for the MCQ. Therefore, last 45 minutes you can allocate for MCQ, answering MCQs. So that remaining time you can solve descriptive. So that if there is any hiccup also, you can be the person to write the answer in MCQ. There is no negative mark in MCQ. For 45 minutes, you can spend only for MCQ last 45 minutes. That may be for both, all the papers for that matter. So that productively can be the person to concentrate descriptive part properly. Now, I would like to share ABC analysis for financial management. Which area I have to concentrate more, which one is more important for the examination. That comes under the A category. The next best is called B category. And the last one is called C category. Always remember, in examination, you are not afford to omit even a single topic. You are going to write the professional examination. Because of the sub questions also there. Fourth question, A you know, B you don't know means accordingly you are going to be the loser only. So A from the water, one chapter, B from the another chapter will be there. Therefore, don't skip any chapter. Now, ABC analysis, A category item for the coming examination, working capital management, the most important topic, working capital management. Investment decision, also called capital budgeting. Capital budgeting is called investment decision. Cost of capital and capital structure. Cost of capital and capital structure. So I'll repeat, the 4 topics are A category item, working capital management, investment decision, cost of capital, capital structure. So try to give more focus on the 4 topics first. In-depth knowledge about the 4 topics is must. Thereafter you can go for B category. B category item, scopes and objectives of financial management and the source of finance. The first and the last topic, there is sources of finance is a theory topic, and the scopes and objectives is a basic concept of FE. It's fully loaded with the theory topic. So concentrate for the theory part, the B category. And last C category, leverage analysis. Thereafter, ratio analysis and dividend policy. So leverage analysis, ratio analysis, and dividend policy. So these are all the topics. C category item we can have. So this is the ABC analysis for the coming examination. The next will go with the chapter by chapter, what to study, how we have to prepare, all those things, where you will commit a mistake. The first one is working capital management, the most important topic, working capital management. In working capital, what and all you have to cover. Always remember, in professional examination, how many problems you are going to work out is not important. How many varieties of the problem you have learned, that is important. So that you have to cover more varieties of the problem. Within less time, you have to cover all varieties. So for that, this analysis may be helpful for your preparation. With respect to working capital, try to solve at least one or two problems of operating cycle, computation of operating cycle. Number of operating cycle in a year also you have to compute parallelly. So requirement of the question, operating cycle with the number of operating cycle. It's also called cash cycle or working capital cycle, you know. Okay. So one or two problems in the operating cycle. Another one problem, operating cycle using turnover ratio. You know, operating cycle we have to express in terms of days. But sometimes available information in rupees available, that is financial information is available. In this juncture, financial information, everything in rupees will be there, but operating cycle you have to compute in days. For that purpose, you have to use the tool called turnover ratio. So operating cycle, number of operating cycle, then with the use of turnover ratio, how to compute operating cycle. That is also you have to try. Next, estimation of working capital. With respect to estimation of working capital, by way of operating cycle, how to estimate the working capital? By way of total approach, by way of cash cost approach. So at least one problem from by way of operating cycle, how to estimate the working capital. One problem, one or two problems from total approach, cash cost approach. Next, with the P&L account, how to prepare required amount of working capital. You have to prepare profitability statement also, and you have to compute working capital requirement. And double shift, in case of double shift, how the impact will be there in the working capital. So these are all the areas you have to cover with respect to working capital. The next one is J. Baumol's model, cash management model, practical problem based on J. Baumol's model. Then credit granting decision. With respect to credit granting decision, at least one problem without changing fixed cost, one problem from with changing fixed cost. Because change in fixed cost has the impact with respect to working capital. Change with respect to what? Decision, credit granting decision. Therefore, if the fixed cost not change remains, contribution is the criteria for decision making. Fixed cost change remains, profit you have to take. So at least one problem without changing fixed cost and one problem with changing fixed cost, you have to identify credit granting decision based problem. Then factoring problem is important for this examination. How to work out factoring, cost of factoring, effective cost of factoring. For that, one problem you have to try. And last one is cash budget. One problem by way of cash budgets. These are all the areas you have to cover with respect to working capital management. Next, with respect to working capital, where and all will commit the mistake. So the first segment I told, what are all these areas you have to cover for the working capital. எங்கெங்கெல்லாம் problem எதை பேஸ் பண்ணி problem போட்டு பார்க்கணும். Those things we have analyzed. Now, where you will commit the mistake. So where and all concept you have to, which concept you have to concentrate properly. With respect to working capital, even for the entire financial management purpose, year is equal to 365 days only. Okay. Many occasions, the question will be silent. We are preparing per annum basis. In this juncture, 1 year is equal to 365. But many problems in RTPs or MTP for past exam question, even our study material, year consists of 360 days. If the 360 days specifically given in this question, only if it is given in this question, you have to take 360, else you have to take 365 days only. So please be careful. Then operating cycle, always you have to express in terms of days or months. So based on available data, operating cycle you have to express in terms of days. Always remember, whenever you are going to write the answer, that answer part must contain prefix or suffix, rupees or units or days or time or percentage. If you are not going to mention, half mark reduction will be there. That's the reason we are not in the position to get the expected mark. So if you want to get the expected mark, even the answer part you have to write properly. So operating cycle we have to express in terms of days or months. Then number of operating cycle, how many cycles, the answer should be how many cycles. Clear? So how many cycles, or you can express in terms of time also. 4 times, 3.5 times, or 3.5 cycle, 4 cycle. You have to express in terms of cycle or time. Then majorly doubt arises from the student side is, while estimation of working capital, it's a commonly committed mistake, including the MTP or mock test also. Many of them committed the mistake. I also did the validation for the mock test for SARC. During that, cash sales are 80% less than credit sales. This type of framing the sentence will be there. It may be 70% or 80%, whatever it may be. Cash sale is 80% less than credit sales. If total sales given in this question is 120 lakhs, then working capital purely based on credit sales you have to take. So further, you have to identify the credit sales. Based on credit sales only, we need a debtor you have to identify. I'll repeat once again. Listen carefully. Total sales 120 lakhs. Cash sales less 80% less than credit sales. In this juncture, we have to find credit sales. Based on credit sales only, debtor will be there. Because for computation of working capital, we need the debtor. How to segregate? So cash sales 80% less than credit sale means what could be the credit sale? Because we need a credit sales, Any idea about what could be the credit sale? Can you please compute and type so that I can verify how many of you are able to tell the answer? I'll repeat the question once again. Total sales 120 lakhs. If cash sales is less 80% less than credit sale, what could be the credit sales? Because based on credit sale only, how to compute data? Any idea? Quickly, try your best. What could be the amount of credit sales? Pick. Ekambaram, try. Ajay, try. Noor, try. Saranya, try. So any idea about how much the credit sales can now? Parameshwaran? No. Yeah, Parameshwaran is correct only. Yes. Good. The answer is 100 lakhs. Yes, Kanna. Good, Kanna. Good. 100 lakhs. Why? Total sales 120 lakhs. Cash sales 80% less than credit sales. If credit sales 100 mean cash sales 80% less, therefore 20. So credit sales 100, cash sales 20. Therefore total is equal to 120 lakhs. So the given question, this question is 120 is the total sales. What could be the credit sales? 20 lakhs. What 100 lakhs is there? 100 lakh is the credit sales. Very good permission. So you should know how to compute, because after computing the credit sales only, we can prepare the working capital estimation itself. Good, Kanha. Next. Hope you understood. Am I right? Yeah. Next. The next one is time lag represent, because many questions they're using the word called time lag. Time lag nothing but delay in payment or delay in event. That's nothing but either outstanding or prepaid. For the purpose of outstanding, they are going to use time lag. So rent, time lag for the rent, time lag for the salary represent what? How many months rent outstanding? So for the purpose of computation of working capital, current asset minus current liability, for current liability, time lag represent outstanding. Outstanding only is called the time lag. Next, creditor for expenses. One question they ask, creditor for expenses. So another one is creditor for purchase. Both are given in that question. So how to handle the creditor for expenses and the creditor for purchase? Creditor for purchase. What is called the creditor? If I am going to purchase the raw material or purchase the product, if I am not going to pay the money, then it is called creditor. Right? Outstanding payment. So creditor for creditor for purchase represent sundry creditors. Very easy. Creditor for expenses represent outstanding. So outstanding expenses is called creditor. So don't get the confusion. Clear? So creditor for expenses represent outstanding. Instead of using the terminology called outstanding, they included them called creditor for expenses. So time lag or creditor for expenses, both the terminology same only for the purpose of working capital management. Hope you understood. Okay, because the small wordings by way of small this type of twist, you may be in the position to get the confusion the entire question paper itself. Clear? சின்ன கான்செப்ட் தெரிஞ்சுக்கோ. Small things make a perfection, but perfection is not a small things. சின்ன விஷயங்கள் கத்துண்டா you can be in the position to score full mark. Then Many students raise the doubt whether while solving working capital, uniformly everything should be in months or weeks. Whether you have to mention everything in weeks or months. For example, rent outstanding, 4 weeks are there. Creditors, 1 month. Sir, one is in 1 month, another one is 4 weeks. Hello. Can you respond? Is it audible? Live with cover, cut right cover. Now it's audible. Kindly check. Yeah, thank you, my dears. Yes. Now, so we have discussed about creditor for expenses, time lag, and all. Am I right? Next. Uniformly, there is no need to mention week-wise or month-wise. Not required. Depending upon the availability data, which one item is on weeks, another item is on month, you can take as it is. There is no what need to convert everything to week-wise or uniformly only by week or month. Hope you understood. Okay. Then, whenever the creditor for expenses outstanding is given, all expenses outstanding for 1 month, if it is given, kindly make sure you have to remember what all the expenses are there, but in that depreciation is not supposed to take. Non-cash item, depreciation non-cash item, for that outstanding concept is not applicable. So you should be careful. Whenever non-cash item is there, for that outstanding is, and the concept of outstanding will not arise. Are you able to follow? Because based on that, they asked one question. Outstanding overhead, kindly remember you have to answer for this. Outstanding overhead for 1 month, rupees 1,000. Okay, for 1 month, rupees 1,000. Total overhead 14,000. Find, you have to find depreciation. How much the depreciation? Okay, I'll repeat the question. Outstanding overhead 1,000 rupees for 1 month. Total overhead 14,000. Find depreciation. Any idea about depreciation? Because in case of cash cost approach, you have to take cash expenses alone. In this juncture, you should know how much the depreciation. You have to remove the depreciation. Any idea about depreciation, my dear? Kindly respond so that you are listening or not. I can identify. Little fast. How much is equal to? So the concept of outstanding applicable only for cash expenses. So cash expenses per month 1,000 mean 1 year how much? 12,000. But total expenses given in this question 14,000. Therefore, how it is possible extra 2,000? So the remaining 2,000 is a non-cash item. So whenever you compute to working capital requirement, total comes to 14,000 less 2,000, balance equal to 12,000. Based on cash cost approach is purely based on cash flow, not based on entire 14,000, because in cash cost approach you have to remove depreciation. Another important thing, the problem is silent. Whether you have to solve it by way of the estimation of working capital, whether you have to solve it by way of total approach or cash cost approach is not given. Then which approach you have to choose? If, remember one thing, remember carefully, if depreciation and profit element, and condition, depreciation and profit elements are given in this question, both are given in this question, it is better to solve the problem by way of cash cost approach. Only depreciation alone is there, or profit alone is given in this question, then you can solve the problem by way of total approach. Both are given in this question means you can solve the problem by way of cash cost approach. Hope you understood. Am I right? Next, the next one, while computing estimation of working capital, current asset, you are going to compute all current asset. You are going to work out all the current liability. Current asset minus current liability is equal to working capital. Add contingency or safety margin or cushion. Some word will be there. It may be cushion or contingency or safety margin. So current asset minus current liability balance is equal to working capital. Assume 100 lakh, we got working capital. Add 20% is the safety margin. Then what we have to do? So you have to add 20% on the 100 lakh is equal to 20 lakhs. Total comes to 120 lakhs. So safety margin is there. We have to add safety margin. But one time peculiarly they ask, safety margin 20% on required amount of working capital. Remember one thing, current asset minus current liability is equal to working capital. After adding safety margin only required amount of working capital. Required amount of, in that required amount of working capital, 20% is the safety margin they set. Understood? Therefore, what to do? So, current asset 100, working capital 100, required amount of working capital 100 means safety margin 20. Therefore, what about the current asset minus current liability? Remaining 80. 80% is equal to this much means 20% is how much? 100% is how much you have to compute. Understood logic or not? Clear? So, in general, current asset minus current liability is a working capital. You have to remember the format. Working capital add safety margin is equal to required amount of working capital. So 20% easily can add on 100 lakhs. Suppose 20% on required amount of working capital, then required amount of working capital is equal to 100% means safety margin 20%. Therefore, remaining 80 is equal to working capital. You have to do the reverse working. Hope you understood how to handle safety margin. Next, with respect to cash management model, Baumol's model. Another one is Miller or cash management model. This time Miller or cash management model, theory you have to be pakka. And the J. Baumol's model, practical problem will be there. Yes. So you have to remember the practical problem. Formulas, especially for the MCQ purpose, you have to remember formula. Optimum cash balance alone, they will ask MCQ. Average cash balance, you have to remember the formulas for optimum cash balance, average cash balance, number of transfers per year, time interval between two transfer, total transaction cost, total carrying cost, total associated cost. So you have to remember 7 formula, out of which any one formula based MCQ may come. So I'll repeat with respect to J. Baumol's formula. Optimum cash balance, square root of 280 divided by, okay, I, that optimum cash balance. Average cash balance represent half of the optimum cash balance. Number of transfers in a year. So annual cash disbursement divided by optimum cash balance is equal to number of transfers in a year. Time interval between two transfers, 365 divided by number of transfers is equal to time interval. Total transaction cost, number of transfers into cost per transfer is equal to transaction cost. Total carrying cost, half of the optimum cash balance into whatever the interest percentage given in this question. Associated cost is a combination of transaction and carrying cost. So you have to remember the formula based on that. Very much chances are that as MCQ also. The next, with respect to decision tree. So sometimes they may ask decision tree based MCQ also. For that, whether benefit, how much the expected benefit, how much the expected cost. Benefit minus cost is equal to net benefit. Net benefit positive means we can go ahead, we can grant credit, credit granting decision, or you don't need to grant the credit. It's based on one decision tree based problem. So gross, how to take the benefit and the cost benefit analysis. Expected income represents sales minus cost into probability of recovery is equal to expected income. Expected cost is equal to cost into probability of non-recovery. How much I can't recover, that percentage I will take. Balance equal to net benefit or loss. Net benefit positive means we can grant credit. Negative means we don't need to grant credit. The next important concept we have to remember, 2 by 10 net to 40. Numbers they can check 3 by 4, what 20, net to 50, whatever it may be. Okay. That concept is supposed to remember 2 by 10 net to 40 represent what? Based on that, nowadays they are asking the questions. Without knowing the terminology, the term difficult for it to what go ahead. Net to 40 represent 40 days the credit period. Today, if I am going to purchase the, if you are going to buy the product on or before 40th day, you have to settle the money. The 40 days is called one credit period. Sometimes 2 by 10 net 40 represent 40 days is the credit period. But if you are going to provide within 10 days, 2% is the discount, the cash discount. Okay. So the rule for 2 by 10 net 40 is 40 days the credit period. If you are going to repay the settle the money within 10 days, you can avail 2% discount. For that purpose only 2 by 10 net 40 arises. Clear? So these are all the things you have to remember with respect to working capital. Now I would like to move for the next topic, cost of capital. Hope you enjoyed the working capital, what and all you have to study, where and all you will commit the mistake. Okay. Shall I go for the next one? The next one is called cost of capital. What and all you have to learn with respect to cost of capital. Important areas, problems, what and all you have to work out. First one, computation of KD, KP, KE based problem. Okay. 3 more question may come. Cost of debt, cost of preference shares, and the cost of equity. Clear? You have to. That too, cost of debt and the cost of preference shares, redeemable with the premium, kindly solve the problem. Okay. Redeemable preference, redeemable debt with the premium. Okay. Redeemable with the premium. Based on that, kindly solve the problem. KE, various manner you have to compute KE, cost of equity, that is interlinked with the dividend decision policy also. Then, one more problem kindly work out. Cost of debt based on YTM method. It's an important one. YTM, yield to maturity based, how to identify. In capital budgeting, you have learned IRR, right? You know how to compute IRR. So that IRR concept you are going to apply in YTM method for the purpose of computation of cost of debt. So cost of debt, computation of cost of debt, YTM based method you have to try. Clear? Next, cost of debt in the middle of the period, how to identify. Cost of debt, how used to compute in case of redeemable. In case of redeemable, today I'm going to release the bond or release the debentures. After 10 years, I'm going to redeem. Then 10 years period will be there. But mid of the year, at least one problem you have to solve. 5 years before I release the bond, company has released the bond or company has released the debentures. 10 years period, now another 5 more years available. So today, what could be the cost of the debt? Based on that, you have to compute. Clear? Because it is in between period, how to identify. These are all available in the study material itself. Kindly say at least one problem. How to identify hidden growth. Yeah, I'll explain now. Now, with respect to growth, okay, always remember this problem will arise with respect to growth moves. DPS by MPS plus G growth. Right? Whether the growth, whether you have to add in DPS or no need to add, that may be the confusion. I'll repeat once again. Dividend per share divided by market price per share plus growth is the formula. Sometimes dividend per share itself, they are adding one more time growth. Thereafter, plus growth formula is also there. Sometimes they are taking as it is. It is always advisable. It is always advisable. Which period you are going to compute KE? For that period, you have to prepare dividend per share. In the sense, upcoming next year you are going to prepare. DPS for the last year is given in this question, for example. Then, for the purpose of computation of current period, I'll repeat, DPS for the last year is given in this question, but you are going to prepare for the current period. Then last year DPS, add growth is equal to current year DPS. DPS for the current year divided by market price per share plus growth. Suppose information available for this period, next period they ask you to compute KE for the upcoming period or weighted average cost of capital for the upcoming period. In this juncture, so current year DPS add growth is equal to revised DPS divided by market price per share plus growth. You have to apply. Understood how to identify handle the growth? Okay. Then next, with respect to weighted average cost of capital, book value method, market value method, and YTM method. All the 3 methods, at least one problem you have to try. I'll repeat: book value method, market value method based problem, YTM based problem introduced by the ICA. Kindly refer the study materials. YTM based, how to identify, how to work out weighted average cost of capital. So all the three methods, at least one problem you should try. Kanna. Clear? The next one is marginal cost of capital based problem. Many past exam questions also there. Marginal cost of capital. What is called the marginal cost of capital? Better average cost of capital are going to compute, but marginal, nothing but additional. They are going to release the new fund only for the additional fund. What could be the KD? What could be the KP? What could be the what KE? So they are going to compute only for the additional funds alone. The additional cost of capital is called what? Marginal cost of capital. At least one problem try based on marginal cost of capital. Then intrinsic value method, how to identify intrinsic value method. This intrinsic value is applicable in this chapter as well as dividend division policy also. Clear? So at least one problem past exam question is kindly try. How to do the bond valuation introduced by the ICA bond valuation. It's available in the study materials, such a simplest question only. Same question may replica may come for 3-mark question. Bond valuation, how to do bond valuation. And cost of convertible debenture, how to identify the cost of convertible debenture. So these are all the areas you have to focus for practical problem with respect to cost of capital. And where and all you will commit the mistake in this particular cost of capital. The problem will be silent. You have to identify whether it is redeemable or irredeemable. Cost of debt, redeemable or redeemable, you have to identify. Cost of preference shares also you have to identify, redeemable or redeemable. How to identify whether it is redeemable or redeemable? Year of redemption given in this question means we have to solve the problem by way of redeemable. Year of redemption is not given, then you have to solve it by way of irredeemable. So based on year of redemption, you have to identify whether it is redeemable or irredeemable. Next, always remember cost of capital you have to express in terms of percentage, because we are not going to write the percentage, we'll reduce half a mark. Many mock test paper also, most of them skip percentage or times or units. You are not mentioning properly. Accordingly, every paper, every question you are going to lose half mark means substantially you are going to lose the mark. And you have to be fingertip with respect to all the formula. Cost of debt, redeemable, irredeemable. Cost of preference share, redeemable, irredeemable. KE, dividend income approach, dividend approach, growth approach, realized yield approach, CAPM approach. Then dividend per share, how to identify. All the formula should be there at the fingertip. Then, with respect to MCQ, average premium based question they may ask. RV minus NP divided by N. In case of redeemable, you are going to use the terminology formula in RV minus NP divided by N. That RV minus NP divided by N is called average premium. And denominator you are using RV plus NP divided by 2 is called the average liability. So they may ask MCQ question, chances are there. After giving the data, given the data, you have to identify average premium alone, you have to identify, or average liability. You'll get the confusion where the average premium is there. Clear? It's form part of cost of capital only. The formula breakup only is called average premium and average liability. Similarly, risk premium is there. With respect to risk premium, KE, CAPM approach, capital asset pricing model approach, RF plus beta into RM minus RF. Am I right? RF plus beta into RM minus RF is there. That RM minus RF is called risk premium. So based on that, they may ask MCQ question. Clear? RM represent market rate of return. RF represent risk-free rate of return. They may give some information. You have to identify risk premium. Then tax benefit. The tax shield applicable only for debt fund. Only for debt fund. So while computing weighted average cost of capital, you have to give the benefit for tax benefit. Clear? That's applicable only for the debt fund, not for the equity fund. Please be careful. Then always lower the weighted average cost of capital is preferable. Clear? Then many occasion in question, KD will be there while computing weighted average cost of capital. Tax also will be there. Sir, cost of debt is given in this question. No, sir. Whether I have to adjust again tax or not. That's the next doubt may ask by the student. Remember one thing. If it is there in this question paper, tax you have to adjust. When you need to adjust the tax, I'll repeat once again. Cost of debt, 18%. Tax rate, 20% is given in this question. While computing weighted average cost of capital, KD is equal to 18 into 100 minus 20. Remaining 80% on 18 only you have to take. Am I right? Few of them going to argue, sir, it's cost of debt, the word is given in this question, that itself 18%, no? Cost of debt itself after adjusting tax, no? Not like that. If the cost of debt word given in this question means, and the tax is also given, mean you have to adjust the tax. Clear? But cost of debt 18%, net tax, net of tax, the word net is given in this question, you know that adjust the tax, else it is a duty for you to adjust the tax. Understood, my dears? Next, with respect to which fund is cheaper, debt fund or equity, that based on that also you have to work out the problem. Then KR represent what? Cost of retaining. With respect to KR, in general, KR is equal to KE. Cost of equity is equal to cost of retaining. But if shareholders personal tax is given in this question, I'll repeat, shareholders personal tax is given in this question, then KR is equal to KE into 100 minus that personal tax you have to adjust. Understand logic or not? Else KR is equal to KE. But in case of market value method, while computing whatever is cost of capital, market value method, KR not arises, because while computing KE itself, it's absorbed. Clear? The next one. Flotation cost and coupon rate. That's the doubt raised by the student. How to handle? Clear? With respect to flotation cost and coupon rate. Flotation cost represent what? Flotation cost represent whenever I'm going to issue, while issuing expenses is called flotation cost. You know, number of preference shares, share price is equal to total share. That is called gross realization. Less issuing expenses is equal to net profits of issue. Clear? You know the formula, KP formula. KP is equal to preference dividend plus, clear, RV minus NP divided by N. So NP represents net profits of issue. For the purpose of computation of net profits of issue, how much the gross realization less expenses, issuing expenses is equal to NP, net profits of issue will come. So flotation cost represent issuing expenses. Sometimes flotation cost given in the terms of percentage, we have to compute, we have to calculate the percentage on gross realization. So how much the amount we received by way of issuing the preference shares, less 5% mean 5% or 2% mean 2% you have to reduce, balance equal to net profits of issue. Another one is cost what? Coupon rate. Coupon rate represent what? 8%, 9%, 10% represent that itself cost of that particular debenture or cost of particular share. So the 8% represent, coupon rate represent 8%, they are going to get interest or dividend on them. Clear? That itself cost of capital for you. Clear? So these are all the things you have to remember with respect to cost of capital. Enjoyed with respect to cost of capital. Now shall I move to next topic? Next one is called capital structure. With respect to capital structure, majorly you have to consider the practical problem based on how to select the capital structure, optimum capital structure, which policy is preferable. For that purpose, company may require 100 lakhs fund. Option A, debt component, equity component. Option B and option C, various manner debt equity component will be there. Which option is best? A is best or B is best or C is best? Our object, you have to remember the format. What is the format? How much the total capital employed for all the three options, particulars A, B, C, equity share capital, preference share capital, debt fund, total capital employed is how much. Then EBIT, less interest. EBIT is a gross income. EBIT, less interest is equal to EBT, earnings before tax. Less tax is equal to earnings after tax. Less preference dividend, if any, balance is called earnings available to equity shareholder. You know the format for the same. Clear? Now, we got for A, B, and C, all the three options. Which option is preferable? In what base you have to select? First, three criteria are that the first priority goes to MPS, market price per share. Based on price earning ratio, you have to compute market price per share. One problem is available in the study material itself, kindly solve it. Price earning ratio, market price per share, based on the selection of capital structure. Suppose it's rarely may come for market price per share. Suppose market price information or price earning ratio information is not given. Then how to select? You have to select by way of earning per share. The second priority is called earning per share. You know the formula for earning per share? Earnings available to equity shareholders divided by number of equity shares is equal to earning per share. Okay, rupees per share, how much? That is called earning per share. And suppose for that purpose you need what? Number of shares. Number of share information is not given. Then how to select, sir? Then return on equity is the criteria. What is the formula for return on equity? Earnings available to equity shareholders divided by equity share capital into 100 is equal to percentage return on equity. So the priority with respect to selecting the capital structure theories, first one is what? MPS, market price per share. MPS information is not there, means you have to select by way of earning per share. Earning per share information is not there, means you have to select by way of return on equity. Clear? So many of them ask the doubt. Sir, one problem MPS they selected, sir. MTP they asked for earning per share. Past exam question return on equity. There's a conflict in what solution itself? No. So it's a prioritization. Which one is first? Next best, thereafter next best. Have to choose. So for that you can get 8 mark question this time. How we have to select the capital structure. Then one problem at least solved by way of, with respect to debt fund, interest component will be there. Nowadays they are selecting interest fund. Suppose we need 50 lakhs debt fund, but they will give the slab rate with respect to interest. First 20 lakhs, 10% interest. Additional 20 lakhs, okay. Next some other percentage, 12% or 18% interest. Thereafter some percent interest will be there. So like income tax slab rate, you have to what? Segregate the what? Interest percentage. You have to identify. So based on that, at least one problem you can try with respect to capital structure. The next one is trading on equity concepts. Whether I can depend on decision making question, whether I can go with equity fund or debt fund. I need additional fund, whether I can depend on own fund or borrowed fund. So decision making question. So always remember the trading on equity. So concept of trading on equity arises if return on capital employed should be greater than KD, cost of debt. In this juncture, we can depend on debt fund. So based on that, few problems are there. Kindly try at least 1 or 2 problems based on return on trading on equity. Decision making problem, whether you have to depend on own fund or borrowed fund. The next important segment with respect to capital structure is financial BEP. You know the concept of BEP in costing. Okay. Here financial BEP. What is financial BEP? With respect to BEP, no profit, no loss situation. Here, my earnings should is equal to all my expenses. Whatever the company is going to earn, everything I am going to dispose with respect to what? Expenses, operating expenses, whatever the interest coverage. Clear? Therefore, my take-home profit should be zero. Nothing but earnings available to equity shareholder should be zero. The net result should be zero. That particular income is called, that particular earnings available to EBIT is called what? No profit, no loss situation. That is called break-even point. That BEP is called financial BEP. So based on that, you can try one problem. Another one segment is called financial indifference point. 2 options will be there. You know, we are going to select the options based which capital structure based on earning per share. In this 2 option, one particular circumstance in which level of EBIT, option A and option B going to give the zero or the same result, same EPS, earning per share. So earning per share of the option A is equal to earning per share of the option B. In which EBIT? That computation is called what? Indifference point. Based on the various past exam questions are there. 5 mark question you can expect. Therefore, financial indifference point based question you have to solve. You have to try. Then next you have to go with approach. Okay, approach hypothesis, value of the firm, value of equity, how to compute based on approach. Then with respect to approach, there are 2 assumptions are there, with tax and without tax assumption. Solve at least one problem based on with tax, another one is one problem based on without tax, so that you can have the conceptual grip over approach. Then recent past they started asking arbitrage based problem. So this time also, how to handle the arbitrage. Okay, 4 or 5 mark question they may ask practical problem. Then implied required rate of return on equity. Based on that, you may expect 4 or 5 mark question. Implied required rate of return on equity. Clear? So these are all the points you supposed to remember. Segment you have to refer for practical problem with respect to cost of capital. Here, where and all you'll commit the mistake. Or what are all the concept you have to remember with respect to cost of capital. With respect to cost of capital, the commonly committed mistakes are with respect to computation of additional number of shares. How many shares you have to issue? Whether you have to take market price per share or face value of the share. For example, I need 20 lakhs, my additional fund. Okay, that I am going to get it by way of issuing shares. I need 20 lakhs that I'm going to raise by way of issuing share capital. Face value of the share capital 100 rupees, but issue price 200 rupees. Then number of share computation purpose, denominator, I need 20 lakhs. 20 lakhs 20 lakhs by share price is equal to, I'll get number of shares. The denominator face value to take or market price you have to take. So which you have to take? You can try, So if I need number of shares is equal to, if I need the fund is equal to 20 lakhs, per share face value is 100, whereas market price of the share is 200. For the purpose of computation of number of shares, which you have to take? Market price you have to take, or face value you have to take? 100 rupees I have to take, or 200 rupees I have to take? Can you please answer in the comment quickly? Which you have to take now? Because accordingly, entire region is going to change. Number of shares itself going to change. Clear? Which one you have to take? Yes. Yes, Kana, Naveen Singh. Got. We have to take only market price. The 200 only have to take, not 100. Very good, Kana. Most of them told her. Very good. Clause election. Correct only, Kana. Not face value is not correct. Okay, market price is correct. No, Kana. Good. So 200 is the correct answer. Clear? Because I need the fund 20 lakhs. Okay. Need the fund means how much I am going to sell. The selling price is the criteria. Market price is the criteria. Because accounts terminology will be different. Here, financial terminology will be different. Clear? Therefore, don't get the confusion between face value and the market price. In this juncture, you have to take only market price for the purpose of computation of number of shares. Okay. So this mistake you have to avoid in examination. Then please be thorough with respect to formula on return on capital employed. Return on capital employed is most important. Return on capital employed, return on equity, return on earning per share, market value of the firm, market value of the equity. These are all the formula. You should be thorough. Clear? Then the next topic is called leverage analysis. Shall I go for leverage analysis? Up to this stage, are you happy? Yeah. Are you happy with respect to cost of capital? Shall I go to the next topic? Yeah. Tomorrow, the same time, 8:30, I am going to share similar basis costing. Okay. For coming examination, what are all the segment you have to remember for costing, where and all you'll commit the mistake, what and all you have to revise before the examination. The same manner, I'm going to conduct costing last minute revision strategy also. Clear? Good. So, in the end of the program, I'll give some gift also. Okay. Now, listen here, Kana. Leverage analysis. Shall we go for leverage analysis? With respect to leverage, simplest topic in the entire financial management, leverage analysis, but concept-based topic. Because it's linked with one accounts paper. So you can remember the format, like what P&L account format, you have to remember. Here also what EBIT less interest is equal to EBIT, similar type only. Therefore, easily you can be the person to visualize, you can be the person to attack the topic easily. Less strain, you can get nice mark by way of leverage analysis. Okay. Now, with respect to leverage, you have to remember DOL, DFL, DCL, degree of operating leverage, degree of financial leverage, and a degree of combined leverage. With respect to DFL, you have to remember the formula. With respect to DFL, degree of financial leverage, at least one problem you can try. Degree of financial leverage formula will change if the preference dividend is given in this question. If there is a preference dividend, how we have to solve degree of financial leverage? Based on that, you have to solve one problem. And operating leverage, the contribution to the EBIT formula, Now you can concentrate. One more variety given by the ICA is operating leverage is equal to 1 by margin of safety. In costing concept, 1 by MOS, 1 by margin of safety is equal to DOL, operating leverage. So based on the study material itself, problems available in past exam questions also available. Try to solve one problem. Then we have to remember the alternative formula also based on changes in percentage. So find percentage of change in EPS, percentage of change in EBIT. So based on change in percentage also, you have to remember the formula. So what are all the formula you need, we have to remember. That is also I will give you. Okay, ma'am. Then income statement, how to prepare the income statement with the leverage analysis. Okay, reverse working problem you have to compute based on leverage analysis. These are all the practical problem you have to remember, such a simple topic only. Where you will commit the mistake, always remember higher the DOL or lower the DOL. What is preferable? Lower the DOL. Degree of operating leverage should be low. Degree of financial leverage should be high. So based on that, MCQ questions also may come. Clear? So if you're going to solve the problem, it's like identifying. Okay, high DOL because of high fixed cost. Therefore, lower the DOL is preferable. Clear? Then levered company, leverage levered company. Sometimes you use the concept called levered company, levered and unlevered. Levered company represent what? Levered means debt fund is there, means levered company. 100% equity company is called unlevered company. So the terminology also equally important. The company is full and full depending on equity shares alone. There is no debt fund at all. That is called what? It's called unlevered company. In my company, equity also there, debt fund is also there. Then it is called, my company is called levered company. Clear? Then ratio analysis. We can go for ratio analysis. Ratio analysis, the next easiest topic. Here we need more practice. Reverse working problem for computation of balance sheet, preparation of balance sheet, and P&L and the balance sheet also sometimes they'll ask. So how we have to do? Always remember, first you have to identify the requirement of the question. Requirement of the question represent what? What they are asking, either balance sheet or P&L or balance sheet. Immediately draw the skeleton format for the same. Asset side, liability side, fixed asset, current asset, capital employed, current liability. Thereafter, the financial, the statement, nothing but balance sheet or P&L requirement. It's purely based on rupees we have to prepare. Therefore, what is the absolute element available in this question? That's the starting point. Many occasions, working capital is equal to 5 lakhs. Thereafter, some ratios and all given. You have to reverse working, you have to compute. So, what is the absolute amount given? Working capital rupees. Therefore, based on that, which ratio applicable? Current asset, current liability. Therefore, current ratio will be there. Based on current ratio, you can identify with the use of working capital, you can identify fixed asset as well as current asset. Okay, slowly how to what? One by one you have to identify. So what is the absolute amount available? That's the starting point. Sometimes gross profit in terms of rupees will be there. In rupees will be there. GP percentage will be there. So that you can identify the sales. Based on that, one by one, step by step, you have to identify how much the sales, how much the net profit, how much the gross profit, so that you can prepare P&L account also. So what is the absolute element available? That's the starting point for the purpose of solving the problem. So solve the problem by way of, one is based on what? Balance sheet, preparation, reverse working. Another one is working, what they called P&L account. Clear? In general, direct question may not come from ratio analysis. Compute gross profit ratio, net profit ratio, BCom level question, they may not go and ask. Okay, but you have to remember the formula, then only you can solve the problem. Okay, what are all the common mistake student used to commit? What and all you have to revise in ratio analysis. So, share capital plus reserves and surplus is popularly called share capital plus reserves and surplus is called net worth. What is that called? Net worth. Share capital plus reserves and surplus plus preference share capital is called proprietary fund. Share capital plus reserves and surplus plus preference share capital is called proprietary fund. The terminology also equally important. Capital block represent total capital employed is called capital block. Total capital employed represent what? Equity share capital, preference share capital, including resource and surplus, preference share capital, long-term loan, debenture, everything as a package. Total is called one capital block. So you should have to remember the terminology. Once they ask a capital block based on that some ratio given. Student got the confusion what is called the capital block. They are unable to solve the problem itself. Capital block itself, total capital employed is called the capital block. Okay. Next, inventory turnover ratio should be in times. Okay, inventory turnover ratio should be in times. Suppose sometimes they are given in months, you have to convert into times. Inventory turnover ratio 6 months is given. 6 months is equal to how many in a year? How many times 6 months come? 2 times. Therefore, inventory turnover ratio 6 months. Therefore, inventory turnover ratio is equal to 2 times. You have to convert into times because based on that only cost of goods sold, the average stock will come. Clear? So cost of goods sold by average stock is equal to average inventory turnover. Average stock is equal to inventory turnover ratio. The inventory turnover ratio should be expressed in times. If it is there in the months, you have to convert into times. Okay. Then these are all the common mistake in ratio analysis. The next topic I would like to go for capital budgeting. With capital budgeting, also called investment decision. With respect to investment decision, what and all you have to study, practical problem. You have to be thorough with respect to one problem, at least one problem with respect to all project evaluation techniques. What are all the project evaluation techniques? That can be broadly classified to two. One is without considering time value of money, another one is with considering time value of money. Without considering time value of money, simple payback, payback reciprocal, ARR. So simple payback, payback reciprocal, ARR, solve one problem. With respect to simple payback, Formula-based approach, one problem. Tabular approach, another problem. In case of uneven cash flow, tabular method you have to apply. In case of what uniform cash flow, formula-based method. Payback reciprocal, you have to express in terms of percentage. Okay, either what average or if it, more than 1 year information, uneven cash flow, you have to use the term called average. Otherwise, you can take percentage. Then last one is called ARR. Commonly committed mistake with respect to AR is, you know, the formula for ARR. Various formulas are there. Various ways are there to solve the problem. What all the ways are there that is given in this question in the ICA books itself. Any one of the formula you can apply. The commonly used formula with respect to average rate of return or accounting rate of return or annual rate of return, ARR is equal to average profit after tax per annum divided by net initial investment. You know, net initial investment represents initial investment minus salvage value is equal to net initial investment. Average profit after tax. Okay, total profit after tax divided by number of years equal to average profit. But always remember the entire capital budgeting technique, only in ARR, you are using the term called profit after tax. Nothing but earnings after tax. All other segment you are using only CFAT. Understood? Therefore, here also you will commit the mistake. Once they ask the question, CFAT for the year 1, year 2, year 3, year 4, various years given. They ask you to find it ARR. They took average of CFAT, but we need one profit after tax. Therefore, how to identify profit after tax plus depreciation is equal to CFAT. CFAT is there means CFAT minus depreciation is equal to profit after tax. After finding profit after tax, you have to compute ARR. Only in ARR alone, you are using what? Profit after tax. Are you clear, Kanna? So, at least you have to solve the problem based on CFAT based ARR. Then, with considering time value of money, you have to solve the problem. Net present value, profitability index, discounted payback, discounted payback, net present value, profitability index, then what? IRR, okay? Desirability factor, profitability index is also called desirable factor, IRR, internal rate of return, and MIRR. One problem at least you have to solve, so that you should be familiar with them, all the concept. Reverse working problem nowadays famous. What reverse working problem? IRR will be given in this question. Profitable index will be given in this question. Based on that, you have to compute how much the initial investment, how much the cash flow. By way of reverse working, you have to compute. It's a very frequently asked compulsory question itself. Okay, one time asked 5 mark question, another time came for 6 mark question. Reverse working problem, it should be there. Then, accept or reject decision or mutually exclusive decision is there. Net present value for project A, 5 lakhs. Project B, net present value 6 lakhs. I'll repeat. Net present value for the project A is 5 lakhs. Project B is 6 lakhs. Clear? So, based on accept or reject decision, which project you will choose? Can you please answer? The question asked in the MCQ is accept or reject decision, which project you have to choose? Project A, 5 lakhs. Project B, 6 lakhs. Which project you have to choose? A or B or A and B, A or B, none of the above, all of the above. Which one you have to choose? Quickly respond, Kanna. Net present value given 5 lakhs and 6 lakhs. Quick. Kindly text, Kanna. Which project you have to choose? When the 1 mark is also important. Am I right? Many of them failed because of want of 1 mark. Any idea? Nobody's texting. Quick. I'm expecting answer from you. The answer is yeah, 5 lakhs. Yeah. Another one is 6 lakhs. No. Why not 6 lakhs? The answer. Fast. Net present value of the project A is 5 lakhs. Project B is 6 lakhs. Which one you have to choose? The answer. Both the project you have to choose. Why 5 lakhs alone? 6 lakhs is better than 5 lakhs. No, why 5 lakhs? Project A 5 lakhs. Project B 6 lakhs. Both the project you have to choose. Why? If the net present value positive mean we can accept both the project itself. Understood logic or not? Clear. Now, can you please tell me mutually exclusive decision, which project you have to choose? Project A 5 lakhs, project B 6 lakhs. The next question, in case of mutually exclusive decision, which project you have to choose? Project A's net present value 5 lakhs, project B net present value 6 lakhs. Any answer? The answer is project B. So, in case of mutually exclusive, if I am going to accept one project, automatically I have to reject the another project. Therefore, where I am going to get more net present value, that is preferable. In case of accept or reject, both the project are profitable, I'll accept both the projects. Understand logic or not? So the 5 lakh, 6 lakh, same only. Clear? In case of accept or reject decision, both the project we can accept. In case of mutually exclusive decision, whichever is higher, that project only have to accept. Clear? So chinna vishayam da. Further, you have to score 1 mark. Are you able to follow? Then, equivalent annual cash flow. You have to solve at least one problem based on equivalent annual cash flow. When equivalent annual cash flow arises, if there is a conflict between net present value and IRR, net present value and IRR, clear? So net present value of the project, based on net present value, project A is preferable. Based on IRR, another project is preferable. Then which one you have to choose? In this circumstance, whenever life disparity is there, and if there is a conflict, then you have to go by way of equivalent annual cash flow. With respect to equivalent annual cash flow, inflow based one problem you have to try, and outflow based one problem you have to try. Based on inflow means whichever is higher order take, outflow means whichever is lower order take. So one problem based on inflow, another problem based on outflow, equivalent annual cash flow you have to try. Then capital rationing problem you have to try. Capital rationing. When capital rationing arises, whenever available fund is less, whereas required fund is more. So requirement is more, whereas available fund is less. Then you have to solve the problem by way of capital rationing. Before you are going to answer for the capital rationing, whether the project is divisible or indivisible, you have to identify. Divisible means partial investments are permitted, mean divisible. Partial investment not permitted mean indivisible. That will be there in the question paper itself. Clear? So in case of divisible, then we have to solve the problem based on profitability index. In case of indivisible, you have to choose the product or you have to solve the problem by way of net present value. So accordingly, you have to rank, you have to choose. So capital rationing problem is also important. And decision making questions. Okay, whether you have to accept or not, whether net present value profitable or clear? How we have to make the decision, CFAT, various rows, various columns based on the decision making problem we have to solve. Clear? So here, where and all you'll commit the mistake. So now you understand what are all the segments you have to cover based on with respect to capital budgeting, also called investment decision. Clear? Now, where and all you'll commit the mistake. So commonly committed mistake with respect to capital budgeting. Profit plus depreciation is called CFAT. Okay, the CFAT how to identify net initial investment of the person, initial investment after adjusting normal after what scrap value is called net initial investment. Then what and all you have to remember, government grants how to adjust, and working capital, investment in working capital how to identify, how to adjust. So with respect to initial investment 100 crores for example, or 100 lakhs. Some government grants they are giving 20 lakhs they are giving. Then to find net initial investment, 100 lakhs investment less government grants 20 lakhs, balance 80 lakhs only have to take for net initial investment. Once they ask them, government grants 20 lakhs, initial investment 100 lakhs. To start the project, working capital you have to put 5 lakhs. Then what is the net working capital, net initial investment? Initial investment 100 lakhs, less government grants 20 lakhs, balance equal to 80 lakhs, and investment in working capital 5 lakhs, total is equal to 85 lakhs is the net initial investment. So you have to remember how to handle net initial investment, how to handle the working capital and investment in working capital as well as government grants. Then salvage value beginning of the period, salvage value end of the period, how to handle. There also they are committing mistake. Salvage value end of the period, suppose 5th year end of project end only, I am getting some salvage value. Then year 1, year 2, year 3, year 4, year 5 cash flow CFAT. Again the end of the year, remember one thing, year 1, 2, 3, 4, 5, end of the 5th year, how much the cash flow? Nothing but salvage value also inflow. Even for the end of this 5th year, whatever the scrap value, salvage value I am getting it, for that also time value of money applicable. PV factor, discount factor out apply. Clear? So you have to apply the discount factor so that you can get discounted cash flow for the scrap value. Suppose beginning of the period itself I am getting salvage value. That salvage value I have to adjust with the initial investment. Initial investment less salvage value in the beginning of the period, balance equal to net initial investment. So you should know salvage value at the end of the period means how to adjust, salvage value at the beginning of the period means how to adjust. Clear? So These are all the things you have to remember with respect to. In one more thing, annuity factor. When we have to compute annuity factor, whenever you come across uniform cash flow, only in case of uniform cash flow, you have to use the annuity factor. Clear? So these are all the things you have to remember with respect to capital budgeting. One beautiful question also they asked me in MCQ. In IRR, total discounted CFAT for the company is 5 lakhs. In IRR, total discounted CFAT for the company is 5 lakhs. Find initial investment. That's all the total question. For that, option A, B, C are given. Any idea how to compute? I'll repeat. In IRR, total discounted CFAT of the company is 5 lakhs. Find initial investment. What would be the answer for the initial investment? It's a concept-based question. Nowadays, they have started asking. Yes, Rajalakshmi, try. What is the answer? The answer is what? Yes, same 5 lakhs only. Because in IRR, net present value is equal to 0. Therefore, total discounted CFAT is itself initial investment. So, total discounted CFAT 5 lakhs means initial investment also 5 lakhs only. Clear? So, the last topic is called dividend decision. With respect to dividend decision, so hope you enjoyed capital budgeting. Right? Dividend decision, what are all the problems you have to work out? One is Walter's formula merged with Gordon's formula. Walter's model into Gordon's model. It's a coupled question only used to come. Guaranteed one question. Frequently asked question also. Else, they have to ask value of the firm if dividends are paid or not paid under MM approach, decision making question. If I'm going to pay the dividend or not going to pay the dividend, dividend policies are relevant theory, irrelevant theory is there. So based on MM approach, it's irrelevant. For the justification, the problem is there. If the dividend paid means what is the value of the firm, dividend not paid means what is the value of the firm. You have to try that problem. Or dividend policies are relevant based on the Gordon's formula and the Walter's formula. So based on that small problem, okay, just application of formula only you have to try. Then based on Walter's formula, optimum dividend payout policy. Based on optimum dividend payout policy, you have to try one problem. Based on optimum dividend payout policy, it's purely based on decision making. If return is less than KE, equal to KE, or more than KE, okay, nothing but cost. Cost is less, cost of equity less, return is more, or vice versa. Accordingly, optimum dividend payout policy rules available. Based on the rule, we have to solve the problem. Clear? So, what is the rule given? R is less than KE, or R is equal to, or R is more than. Accordingly, which one you have to do? Whether 0 is the dividend or 100% you can pay the dividend, that you have to identify. Clear? So, these are all the things you have to remember with respect to one dividend policy, also dividend decision. So, these are all the things you have to cover with respect to financial management, such as simplest one. Within less time, you can score more marks in financial management. Try to concentrate first at descriptive, last minutes only, 50% on 45 minutes only, you have to allocate for MCQ. Now, I told I will give them surprise gift for you. Right? I'll give some gifts also. So, hope you enjoyed the session first of all. All are happy? Useful? Useful are in Kindly respond, my dears. Yeah. So tomorrow, 8:30, we are going to meet again with respect to how to handle costing paper. Clear? So costing paper, it may took extra time also because 100 mark paper, 15 chapters are there. I will discuss about the 15 chapters. Clear? Now, I would like to provide theory part. What are all the theory you have to study? Okay, that PDF I will send you. Next, what are all the MCQ, concept-based MCQ you have to study? If you want, I'll give that PDF also. Then list of formula, what you have to remember. A lot of all the topic list of formula. I'll give the one PDF for you. Clear? Then all in one problem. First chapter, last chapter, I have created one problem with the solution. Okay, or video lecture for the same. Clear? I'll give the question as well as video lecture link. So then, by way of one problem, it is equal to an RTP. Okay, first chapter to last chapter, how we have to handle. By way of single problem, you are going to handle all the area. So that because financial management itself, financial statement based on that, how to handle that problem. It took another 2 hours to solve the problem itself from your end. So then you have what entire topic, you have the grip. Okay, and what are all the 30 concepts you have to remember day before examination? Clear? Practical as well as theoretical based. What are the 30 concepts you have to remember? So 5 elements I like to provide as a PDF or what text. Okay, if you are interested, you can WhatsApp me. I'll give the link. Okay, I'll give the water PDF as well as water link for everything. I'll repeat once again. Past exam theory questions PDF, MCQ PDF, list of formula what now படிக்கணும் அது PDF, clear all in one problem and answer for the same, and 30 concept short videos what and all you have to revise day before examination. All the 5 I'll give it free of cost. Clear? So my phone number 984166140 is my WhatsApp number. Texted also 984166140. Clear? By tomorrow I'll send all the documents so that you can quickly revise. It may be useful for your examination preparation. Enjoyed the session. Wish you all the very best for your examination. Tomorrow we can meet. Kindly inform your friends also. They can also join for costing paper. Okay, how to last minute revision strategy for the costing. Wish you all the very best, my dears. Bye bye.